Hey guys, it's Carter. Welcome back to the next podcast of the Swing Trade Blueprint. Hope you guys are all having a fantastic day today. Now, in today's video, today's podcast, we are going to be talking about emotions. Emotions are a key factor for investing, for trading, and even just money management in general. So we're going to be talking about how I manage my emotions as a full-time swing trader in the stock market. So I hope you guys all enjoyed this, and if you guys are watching and listening, make sure you guys hit that like button and follow wherever you guys are listening, whether it's liking, whether it's following. Just hit that subscribe, hit that follow button. It means the world to me. And guys, if you want to take trading to the next level, we have an amazing 8-week course where I teach people my strategies, my approach, my mindset, everything, how to find undervalued stocks. It's awesome. We have private live streams, quizzes, lectures, a group chat, everything to take trading to the next level. So, I hope you guys all enjoy it, and hit that like button, subscribe, and let's get started with this. So the first thing, when you hear people saying, oh, emotions are very, very important with trading, it's kind of one of those things you don't understand until you actually start trading with money, because you think it's easy. You think you just buy low, sell high. And honestly, trading in general has this, it's hard to explain. It has this thing where everybody thinks they can do it, no matter what. No matter how educated you are, no matter how old you are, everybody thinks that they can buy a stock and sell it at a higher price. But the reality of it is about 85% of traders fail. At the end of the day, I see the same statistic with businesses. About 85% of businesses fail within 2 years. So, what do traders and businesses have in common? Well, the first thing you guys need is a plan. You need to have a solid trading plan. And how this ties to emotion is very simple, because having a well-constructed trading plan can help you stick to your rules and avoid emotional decisions. So, I think we all remember when GameStop and AMC and all those stocks were going nuts. I think we all remember that. Now, during that time, there was so much emotion in the market. There's so much FOMO, fear of missing out, which caused the stock to squeeze up higher and higher and higher and higher and higher and higher and higher. But the reality of it is that stock was probably one of the worst stocks you could buy at the time, because, like I said, buy low, sell high. If a stock's hitting all-time highs, if you're trying to trade it, it's going to be hard to do so. So, one of the things that I always recommend doing before I ever place a trade to help my emotions and help my plan is set a pretty much set and plan out your entry, your exit, your stop loss level for each trades you take. Include your risk management rules and how much capital you're pretty much willing to risk per trade. So maybe you only want to risk 2% of your capital, but you want to have a risk and reward of 3-to-1. Put that in your plan. Put that in that checklist there. So I do think it's very, very important here. So the second thing you guys can do as a trader is practice self-awareness. One of the things here is practice mindfulness as well. Mindfulness helps you observe your thoughts and emotions without reacting impulsively. When you see a stock start squeezing up, you tell yourself, I gotta get in, this thing is going to the moon, and then you're chasing and you're not controlled. The best mindset I've always had is just trying to be stone cold. If I could trade one stock every week, I'm going to make sure it's the best stock I can find. So you got to have that approach. And I do think another thing here is over trading. Emotional trading often leads to excessive trading. When you're starting to trade, you constantly feel like you have to be in a position every day, every week. But the reality of it is it's always better to just trade quality, whether it's once a month, even once a year. But if you're dead money in that trade with a large amount of money, you can make a significant amount of money. So, one of the things that I would recommend doing, especially if you're just starting out, is set a limit for the number of trades you can trade in a day or a week. So if you're a day trader, maybe set it at 2 trades a day. If you're a swing trader, maybe 2 trades a week. Stick to it even when you feel the urge to chase after a sudden market movement. Another thing that I want to talk about is focusing just on the bigger picture with your trades. So, you constantly always feel like all traders need to double their account. Everybody thinks that way. When in reality, if you focus on that bigger picture of 1, 2, 3%, guys, you're going to be a great trader. You're going to be a fantastic trader if you take profit at 1, 2, 3%. And the reason why that is because if you just compound that over the course of a year, guys, if you get 1% a week, you're looking at 52% every single year. You're times 5ing the S&P 500 on average, which is awesome. So that's why just focus on the bigger picture. Focus on the long-term outlook of your trading career. Don't expect to double anything. Don't expect to get rich quick. And another thing is use smaller size during uncertainty. So, when the Fed was coming out with possible interest rate cuts and little market volatility, I didn't go as heavy in on a position that I normally would have. Even though that position went up in value and I made money off it, there was just uncertainty in the market. So reducing the size of your trades during a volatile period decreases the emotional pressure of a potential loss. So another thing you guys can do that I think is important is just automate your trades. Nowadays, you guys can set your stop loss. You can set your profit already planned out, which is so incredibly cool. Emotions can take a little step back when everything's planned out for you. The only thing you'd really have to work on is just not chasing. I think that's important here. So use trading platforms like Moomoo. That's the one I use. I love them. I'll put them down below. 20 free stocks by signing up. So click that link. But use trading platforms that allow you to set up automatic buy, automatic sell orders based on your strategy. So you don't have to second guess yourself in the beat of the moment. I think that's very important here. Another thing is stay educated, stay informed. As a trader, as an investor, you have to always consider yourself a student. I consider my student that I'm a student in the market every single day. The second you think you know everything, the second you lose money, and it's just terrible. So I do think staying informed about the market fundamentals can reduce emotional decisions based on price swings. So set up time for daily or weekly analysis. Make sure you guys have a trading journal so you guys can stay up to date on your trades, so you can review what's working, what's not working, and I think that's really, really cool. Another thing, just accept losses. Trading, losses are a part of the game, right? It's like playing football. Do you think the other team is gonna score at some point during your season? Absolutely. So fear of loss can result in panic selling or holding on to a losing position for too long. So view those losses as learning opportunities. Like I said, journal your trades, review what's working, and more importantly, review what's not working so you can alter that strategy and your edge there. The second thing here is find a trading community. I have one. I love it. And what this does is, trading alone in general can help increase emotional stress because you feel like you're alone. You have no one to ask questions or bounce ideas off of. And this will start to panic sell if you get nervous. So, join trading groups with me or even other traders, through podcasts, YouTube videos, TikToks, or forums where you can share insight, give advice, or vent your frustrations with other traders. I think that's very important here. So the last thing I want to talk about is just take a break. Take a break. The approach I have is if I'm 3 for 3, I'm done, right? If I'm up, if I place 3 trades in a given week and I'm profitable, I'm not trading. I'm not. There's no way. If I have 3 losers in a row, I'm taking a break. 3 winners, 3 losers. I'm taking a break. Guys, the second you think you know everything and you're getting on that hot streak, that's when you start going heavy. That's when you start not focusing on that plan, that strategy. And then when you have 3 losers in the row, you have that opposite mindset. How can I get this money back? How can I win? How can I get this? So, mastering your emotions is a crucial part of a trader. The biggest thing is just stick to your rules, stick to your plans, and just stick to your goals. And you'll be in a great spot, guys. So I hope you guys all enjoyed this. If you guys did, hit that like button, subscribe, and don't forget to check out our school if you guys want to learn how I manage emotions and my thought process and all that stuff and how to find undervalued stocks. So check it out. You won't regret it. It's absolutely fantastic. So like, subscribe, and I hope you guys have a great rest of your day and take care.